Welcome to our channel where we discuss life skills. Today, we are going to talk about how to prepare for inflation. Inflation is coming. What are you doing in your personal finances to prepare for it? Have you talked with your financial advisor about how to prepare for inflation? You may want to make that a priority. Any cash position is depreciating as we speak. You certainly need enough cash to pay your bills and have an emergency fund. But if you are holding on to too much cash, your purchasing power is decreasing. In a normal year where inflation is 2%, a purchase that would have cost $100 last year will now cost $102. That may not sound like a lot, but throughout your lifetime, that can really add up.
In 10 years' time, it'll take $121.90 to buy the same thing that cost $100 the prior decade. That assumes a 2% inflation rate, which we are unlikely to see again for a long time. No question about it, if you do nothing, your purchasing power and your net worth will take a hit. If you want to grow your net worth and be able to retire someday without relying on someone or some government entity, then you'll need to take steps to make sure your money is working harder than inflation. Otherwise, you'll have what we call lazy money. So what do?
Ultimately, that is between you and your financial advisor. We are not financial advisors, but we can share some things you should be talking about. First, consider investing in assets that will increase in value with inflation. These can include stocks, some bonds, real estate, and precious metals like gold or silver. If you have been watching our channel, you know that we like real estate. We tend to invest in what we know. We are not adept in Bitcoin, so we choose not to invest in it. Some people will recommend it, though, as a way to hold on to your purchasing power.
Bitcoin sounds too much like funny money that can be wiped out by governmental regulations, so we avoid it. Keep in mind, there are income-producing assets and income-consuming assets. If your real estate is not producing income, then it's a burden as you have to maintain it, pay taxes on it, and likely pay interest on a mortgage. We believe the only non-income producing real estate worth owning is the house you live in. Any real estate should pay for itself and provide the owner a return. On a side note, if you have a rental property, consider a month-to-month lease so you have the flexibility to increase rents as your costs go up.
The stock market is the next appreciating asset, but keep in mind it only does so over time. Stocks have gained 30% a year and also lost 30% another. I think it was Warren Buffett who said, "It is not about timing the market, it is about the time in the market." Most investors get nervous and sell when the market falls. Then, they buy when the market goes up. Pretty crazy when you follow the herd. If you think about it, you're essentially buying high and selling low. That is why the stock market is not for everyone. If you get too nervous and sell when you see the value of your portfolio drop, then the stock market is not the place for you to create wealth.
There have been a lot of new investors in the past few years. That has driven up stock prices to a point where the price to earnings ratio, also known as the PE ratio, is approaching a concerning level. The only reason to buy stocks and bonds is if you plan on staying in the market for the long term and view market drops as an opportunity to buy low. Make no mistake about it, the stock market is going to drop at some point. Another area is Treasury inflation protected bonds, also known as TIPS. You can purchase these through brokerage firms, banks, or directly through the Treasury Direct program. They're available in $100 increments and are issued in 5, 10, and 30-year terms.
They are tied to the CPI. Watch our video on how inflation is measured to better understand the Consumer Price Index. While the interest rate on TIPS is not great, it does keep you whole with inflation. Interest is paid twice a year and is also exempt from state and local taxes. The last asset class is precious metals. You can buy precious metals directly in the form of coins and bars, or you can buy precious metal securities in the stock market. Whatever asset you decide to use to hedge against inflation, be sure to do your homework and consult a certified financial planner.
The last area we'll discuss is the need to reduce your cost of living expenses. During times of inflation, it is best to avoid spending any more than you have to. Check out our video on top ways to save money to learn how you can reduce your costs without sacrificing the quality of living. For most of us, achieving financial freedom is more about how much we spend than it is about how much we earn. If you found this video helpful, then click on the like button, subscribe to our channel, and click on the bell to get notified of our next video. Until then, work hard, earn more, spend less, and invest the rest. Thank you.